Ladies and gentlemen, good day and welcome to the Bodal Chemicals Limited Q3 and 9 months FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit Patel, Executive Director at Bodal Chemicals Limited. Thank you, and over to you, sir.
Thank you very much. Good evening, everybody. On behalf of Bodal Chemicals Limited, I extend a very warm welcome to everyone for joining us on the call today. On this call, we are joined by our CFO, Mr. Mayur Padya, and SGA, our investor relations advisors. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchange and our company's website. We will give you a quick overview of the recent developments in the chemical industry, and then Mr. Mayur Padya will walk you through the operational and financial performance for the Q3 and 9 months FY23. Global inflation is weighing heavily on the end market like textiles, paper, pharma, plastic, agrochem, water treatment, etc. Consumption of end-user industries has been sluggish due to the overall slowdown in the global market. Uncertainty about the European market has further deaccelerated the demand scenario of the chemical industry. The two major markets, the US and European market, have been slow for more than 6 months, owing to multiple headwinds from rising inflation to uncertain geopolitical scenarios. When it comes to China, their policy of zero COVID has slowed their economic growth for a while China's growth is slow, which has affected the prices of key commodities around the world, including dyestuff and dye intermediates. We are India's largest integrated manufacturer of dyestuffs and dye intermediates and hold a meaningful market share in the world. In today's environment, where Indian suppliers are emerging as preferred partners globally, we have been able to hold our leadership position. Coming straight to the operational performance, overall business performance for 9 months FY23 has been weak, as the company's total revenue stood at 1178 crores, a degrowth of 20% due to the subdued performance of dye intermediates and dyestuff chemicals. The price volatility of key raw materials has affected many textile players in India, resulting in suboptimal capacity utilization, inventory destocking, and slow exports. Coming to dye intermediates, at present dye intermediates like H-acid and vinyl sulfone pricing has been volatile, putting strain on the industry player. For 9 months FY23, total revenue from dye intermediate chemicals stood at 258 crore. H-acid and vinyl sulfone prices were near 422 and 263 per kg in the Q3 FY23. Being an integrated dyestuff manufacturer, we produce 25 dye intermediate products, and over 40% of these intermediate capacity is captively consumed, resulting in a cost advantage for our dyestuff products. The balanced capacity of dye intermediates is served in both domestic as well as global markets. Many intermediate manufacturers in India are still under pressure due to slow demand. Going forward, we can expect nominal improvement in the dye intermediate business. Coming to our dyestuff business, end application industries like textile, leather, paper, and other dyestuff consuming industries have not been performing well during the last few quarters. All leading textile companies are facing global headwinds, which have curtailed the outlook for the dyestuff products. The dyestuff business for 9 months FY23 stood at 442 crores. Coming to basic chemicals, more than 50% of our basic chemical is captively used for dye intermediates. Our overall basic chemicals contributed around 134 crores. Coming to the chlor-alkali business, the chlor-alkali business continues to perform reasonably well with the revenue of 229 crores for the 9 months FY23, driven by a healthy volume uptake. During the quarter, the realization of caustic soda has been normalized. Production were halted for 3 to 4 weeks due to the implementation of technology upgradation. Our chlor-alkali business will contribute meaningful business in the coming period on back of a technology upgradation. We foresee demand for caustic soda to remain healthy from FMCG, textile, and paper industries. Since very few players have a presence in North India, we will have a competitive edge to a certain extent. Coming to benzene derivatives and sulfuric acid projects, as highlighted in the earlier call, our main goal is to replace imports and capture business in the pharma and agrochemical spaces where PNCB and ONCB are used. We will be installing the capacity of 63,000 tons per annum of benzene derivatives. The Saika Greenfield project is progressing well and is expected to start by September 2023. Most of our subsidiaries have reported a weak performance due to a soft demand, whereas Senar in Turkey has reported a decent performance of 56 crores of top line in 9 months. In a medium to long term view, these subsidiaries will bring meaningful business. However, in short term, we are expecting a modest performance. Our priority would be to endure these headwinds and focus on starting the Saika project by September 2023. We have been moving up the value chain and working relentlessly towards diversifying the business from our core dyestuff and dye intermediate business to other specialty chemical products like benzene derivatives. Once we have decent visibility of demand of our product portfolio and new site is stabilized, we will restart the sulfuric acid project. Manufacturers and exporters in India are having a challenging time managing the overhead cost. Over the years, chemical industry has seen a transformation. Long-term story of India remains intact and chemical industry is poised to grow from here on. However, we expect overall demand to remain grim for the short period. Thank you, and now I hand over the call to Mr. Mayur Padya to walk you through the financial performance.
Good evening, everyone. The overall performance of the company has been muted for the quarter gone by. Our standalone performance for Q3 FY23 is as ahead. Total revenue for Q3 FY23 stood at rupees 307 crore. EBITDA stood at rupees 25 crore in Q3 FY23. Net profit for the quarter stood at rupees 2 crore. Our standalone performance for 9-month FY23 is as ahead. Total revenue for 9-month FY23 stood at rupees 1,156 crore. EBITDA stood at rupees 100 crore in Q3 FY23. 9-month FY23. Net profit for the quarter stood at 29 crore. It's 9 months, 29 crore. Our consolidated performance for Q3 FY23 is as ahead. Total revenue stood at 318 crore for Q3 FY23. EBITDA stood at rupees 27 crore for Q3 FY23 with a margin of 8.4%. Net profit for the quarter stood at rupees 2 crore for Q3 FY23. Our consolidated performance for 9-month FY23 is as follows. Total revenue stood at rupees 1,178 crore for 9-month FY23. This includes export of 33% and domestic of 67%. EBITDA stood at 114 crore in 9-month FY23, a degrowth of 37%. Net profit for the 9 months stood at rupees 35 crore against rupees 70 crore of 9-month FY22. 9-month FY23 performance of the key subsidiary was subdued except for Senar. Senar has reported a total income of rupees 56 crore and has reported noteworthy profitability. Performance of other subsidiary has been lower than expected due to soft demand. Segment-wise performance on a consolidated basis for 9-month FY23 is as ahead. Die stuff revenue stood at rupees 442 crore. Die intermediate revenue stood at rupees 258 crore. Basic chemical revenue stood at rupees 134 crore. Chlor-alkali revenue stood at 229 crore. TCCA revenue stood at rupees 17 crore for 9-month FY23. Total production volume on a standalone basis for the 9-month FY23 is as ahead. Die stuff reported 10,877 metric ton. Die intermediate reported 9,892 metric ton. Basic chemical stood at 1,16,870 metric ton. Chlor-alkali stood at 59,314 metric ton. And TCCA 726 metric ton. With this, I conclude the presentation and open the floor for further question and answer.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question, 1. We take the first question from the line of Aditya Khetan from Smith Institutional Equities. Please go ahead.
Yeah, thank you for the opportunity. Is my voice audible?
No, it's not clearly audible, Aditya. Could you switch to handset mode and talk, please? Aditya, are you still there?
Hello? Yeah, now is it audible?
Yes.
It's better.
So my first question is on the die stuff and die intermediate volume. So for the quarter, what we are witnessing that the die stuff volume has almost become halved as compared to on YOY basis. Whereas the die intermediate volumes, they are still down by roughly around, you can say, 40-50%. So what is the basic reason for decline in so much like volumes in die stuffs and die intermediate business? And also, so just adding to this only, so the TCCA volumes also like from 351 metric tons last year, it has fallen to around 134 metric tons. Means I just want to understand how is the demand shaping up right now and why is there is so much decline into the production volume numbers?
See, die intermediate and die stuff both are related business.
Mm-hmm.
Whenever die stuff's demand is solid, at the same time, die intermediate demand will be there. So mostly die stuff is exported to Europe, America, and the major other user is China. And presently we witness that the US is bit soft, Europe very much slow, and China is also facing issue because of zero COVID policy. Mm-hmm. So demand is very low compared to last year, and this has affected the production also. So initially we go on producing, but after 1 or 2 months we found that take-up is not there from the market, and there is no reason to go on producing and block the fund in inventory. So to the extent we can sell, to that extent we are producing now. So this is the main reason why die intermediate and die stuff is lower compared to last year. And this is not the Bodal specific scenario. Across the industry, if you have seen the result of other companies, there is also degrowth as far as volume and profitability both is concerned. As far as TCCA is concerned, over there is not much issue with demand in USA, but there is the issue as far as availability of container for export. and some of our customer has agreed and they have arranged container from USA, and to that extent we are producing and exporting that quantity. Another reason, see, earlier, particularly in summer season, there is a demand locally also available. But during the last quarter, here we have a winter, so local consumption is almost at a negligible level. So local supply chain was not available and local demand was not there. So here also, presently, plant is working, but there was an issue of container availability, and that's why we are not able to fully perform or fully utilize our capacity. Presently, there is an order and factory is working, but as we have witnessed, there is no continuous production is possible. Now, there is no issue as far as plant or setup of product is concerned, but issue is just related to market. Hope I have covered everything, whatever you have asked.
Yes. I just want to know, so if now the demand is weak, so considering if the demand goes up and things becomes so normalized, so can we expect the production volumes again to go back to that levels of quarterly run rate of 6,000, 7,000? And you also mentioned regarding the short-term pressures, and you also highlighted into the presentation that the short-term could be weak. So you are referring for the next 2 quarters or for the next 1 quarter? Just wanted to know that.
Presently for 1 quarter. After 1 quarter, what will be the scenario world over? That is difficult to predict. So when we refer to short term, that is 1 quarter.
That is 1 quarter. Okay.
Yeah.
So next quarter also we can expect a similar sort of production level, and post that from Q1 we can expect an uptake.
Current quarter there will be somewhat better production, particularly chlor-alkali product and basic chemical, because in last quarter there was some extraordinary effect in chlor-alkali because of the technology upgradation and capacity expansion implementation. So almost 70-80% of October get wasted, rather utilized in this technology upgradation, and we couldn't manufacture for that month. So because of that there was a lower production, and in basic chemical last quarter, November was a month where we took a annual shutdown for government agencies, boiler inspection and somewhat the maintenance. So that disturbance won't be there as far as current quarter is concerned, and there is a slight improvement in demand as far as dye intermediate and dye stuff. It's not significant or considerably, but negligible or slight improvement is there. So we can witness somewhat better quantum in current quarter compared to last quarter.
But do you think that so this quantum of improvement in demand could again be offset because of the recent Turkey situation? Because it is said that the Gujarat dye players are much impacted because of this, because so the players were exporting to Turkey. So that improvement in demand could be offset from this issue?
Maybe that time will say, but it is really important issue for the whole industry, because the maximum export from India of dye stuff is happening to Turkey. And because of this earthquake, major consumer is being definitely affected. So there will be somewhat lesser demand. But out of the total export to world over from India, this can be about say 10 to 15%. So that will have somewhat negative effect.
So 10 to 15% of overall exports of dye stuff is to Turkey. Sir, what would be the our contribution of exports to Turkey?
Our contribution is about say 10 to 15% of the total export that is happening from India to It's rather 15 to 20% contribution of Bodal.
Okay. So again, sir, so next quarter, so our export volumes would again be impacted by another 20% of Turkey. Hello? Hello?
We've lost the connection for Aditya. In the meanwhile, we'll move to our next question.
Yeah.
That's from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. So first thing, I would like to know that everyone right now is talking about reopening of China will benefit chemical sector, especially the commodity side. So how we are seeing this, and how and when is going to reflect in our numbers on standalone and also on the subsidiary side? Any take on that?
So the COVID problem that was going on in China, that definitely impacted the Indian players because of the disturbance within China, the overall demand for many input chemicals, commodity chemicals, they were impacted. So there were some exports available easily for Indian market. So that once things go back to normal in China, I feel that that those exports available to India will be less. That will have a less pressure on the Indian players.
Okay. Okay. So also as we are, this ties are very much linked with the textile industry. So can we get what kind of revenue exposure we have to the overall textile industry, and maybe what kind of feedback you are getting from your customer in this industry right now in terms of demand?
Well, the stuff being sold to the textile is around, this year it will be around 300 crores.
Okay. 300 crore is till 9 months?
No, for the annual number.
Okay. For FY22 you are saying?
Yes.
Okay. And in terms of customer feedback, if you can highlight it to what kind of scenario they are facing. And
there are definitely volume pressures when it comes to textile industry. I think the main reason being, Europe being the second biggest consumer globally, is going through, because of the war and all this, going through, inflation and going through a lot of imbalancing. So the overall demand that is usually coming from Europe is not really happening. It is really impacted big time. So due to that, the overall textile consumption, from garmenting point of view or processing of the textiles point of view, is been impacted, since last about 2-3 quarters. Going ahead, it really depends on, what happens with the war, how early it's settled down, and how early European countries are able to, get back to normal. So I think as per the textile feedback from the textile buyers or players, is definitely that the demand of overall textile products, I think, will be impacted for at least 2-3 more quarters.
Okay. And when you are talking about export side, just wanted to clarify, in the presentation, the 9-month figure for domestic and export percentage revenue has been more or less same, 67% domestic and 33% export, whereas there's been significant volume decline in different segments. So how to interpret this data? How we have maintained the revenue mix in terms of.
Yes. Here, our total volume has decreased, total revenue has decreased. So export number has also decreased, but overall contribution to export and local has remained more or less same.
Okay. Okay. And
33% is of the current quarter's numbers, 33%.
okay. Okay.
Yeah.
And one last question. In terms of your this technology upgradation in chlor-alkali, so what kind of volume increase we should be expecting, and how much margin benefit, if at all, would be coming from there?
The volume earlier we were producing about 185 metric ton per day, and that has increased to about 235 metric ton per day. And going ahead down the line, we can reach to about 260 to 70 metric ton per day. So earlier annual production was in the range of 55 to 60,000 metric ton, which we can go up to 90,000 metric ton. This is the production number I am talking about.
Yeah.
So capacity is almost 1 lakh metric ton. So almost 50% jump in volume is we will witness going ahead.
Okay. And it would be, I mean, the utilization level would be how much, I mean, you will be taking a gradual phase, or how we should see the utilization level?
Yeah, as I mentioned, see, in October we have inaugurated the new plant, and by December we have reached to 235 metric ton. So
Okay.
going ahead within 2 months, we are expecting we'll reach to about 270 metric ton per day. So down the line, 2-3 months, we will reach to optimum capacity that is possible over there.
Okay. And for FY24, we'll be operating at full, basically.
Yes, yes. That will
Okay.
almost.
And how much investment was there in this process?
See, in acquisition, hello?
Hello? Yeah.
Yeah, correct. So, there is we spend about 150 crore as far as acquisition is concerned, and another about 160 crore we spend for this modernization and capacity expansion, as well as some normal replacement capex. So total about 310 crore we have spent.
Okay. Okay. That's it from my side. Thank you.
Yeah. Okay.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Anand Venugopal from BMSPL Capital. Please go ahead.
Yeah, thanks for the opportunity. Most of my questions were answered earlier itself. So just I have one quick question, like if you could explain how the market for dye stuff and dye intermediaries improves from year on as such?
We expect the market to be in the similar range of demand which was there in the Q3 of this year. At the moment, it is going quite flat compared to the Q3. Going ahead also, we feel that at least for another few months, we don't see any major turnaround. But we are hoping that after 3-4 months, a good demand phase should come.
Okay. So you had earlier mentioned that the slowdown in Europe, US and China has affected the dye intermediaries and dye. Based on around how high cotton prices affected these two dye intermediaries and dye stuff?
So the volatility in the cotton prices also affects the textile segment, where again after cotton is being used, the dyes are used to process the fabrics. So the volatility and especially the higher prices of cotton definitely affects the textile market, because already there are some volatile demand coming from different areas of the world. At the same time, the input, which is cotton, if it's very high in price, then it's not really affordable or viable. So that definitely has a little impact.
Okay. All good. Thanks.
Thank you. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar sir, and Thank you for this opportunity. Sir, firstly, sir, if you could explain us historically, when have the diced up industry been in this kind of scenario, and how have the cycle turned? What are the factors that will give signals to the investing community that the diced up market has the correction is done with? And earlier, sir, was it the rally which we saw in the demand which was there 2-3 quarters ago, was it a supply side issue because of COVID that was addressed by the Indian players and especially by you, the numbers which we have done for last year? If you could explain that, the thesis there, what happened 2-3 quarters back and what is the situation today, and how will we understand when the reversal will start happening?
So a similar time, I would say, was I think between 2008 and 2012. That is when I think the numbers of dye intermediates, dye stuff companies were impacted. I think there was a lot of volatility and margins were really low. The reasons were different. During those times, China had come up with big capacities. That was about 15-20th year for them into this industry of dye stuff and intermediates in the reactive dyes. And so there was a lot of pressure, coming from China, and especially all the incentives that were offered to them were also very different. So their business model of producing dye intermediates especially was very favorable for them. There were incentives in double digits. Electricity used to be very cheap. The labor used to be cheap. At the same time, they had expanded very, very huge. And here also a few players had expanded. So that was a period when there was an extra capacity that generated in the global markets. So that created a lot of pressure on the margins especially. But by around 2012-13, the environmental issues which were neglected in China, came on the surfaces, and that is why the capacities had to be restricted. The new ones were restricted to set up. So then that kind of balanced out the whole capacities globally. And, since then, intermediate dye stuff businesses are doing quite consistent until this particular couple of quarters. Last year, what I feel is that it was a time when overall global scenario had come back to normal post COVID, and COVID kind of was very minimized, and it did not have any global impact in a large manner. So overall demand coming from entire world was very strong, and the feeling was everything was coming back to normal. So I think overall demand for I think almost everything on this planet was very strong. So that was the reason why I think 2 quarters went really well. But since then, especially the war that has happened in Europe, which again, Europe is second biggest consumer after US. So these products, mainly textiles and paper and leather, all this are ultimately consumer products. And so textile especially, has been going through volatile times and volatile demands. So that has really given the pressure. And another pressure is that China, because of this COVID, increase internally in the country, there was a lot of product. Some areas were disturbed, and due to that, many products were not being consumed locally. So again, there was extra product available in many chemicals, which was to be exported. And India again being second, third largest, consumers in all these products. It was many quantities were available here. So that also kind of created a little pressure. So a little extra supply in some chemicals, and the overall demand, coming down, especially from textiles. That has impacted the current scenario.
So sir, China this problem has generated as China, the imports from China. This is what the understanding is, that the opening up of China, the Chinese economy has resulted in substantial amount of import of dyestuffs and intermediaries globally. So this is the correct understanding as for the reason why our capacities are lying low or utilization levels are low, and also the demand destruction. Both factors have played.
So demand is affecting demand is affecting and creating all these effects, because Chinese products, like, no producer wants to slow down their plants or shut their plants until they reach a very low point. So and to reach that low point or to realize that low point, it takes months. And by the time that low point comes, where there is too much of excess supply available or already being produced, by that time markets really go down. So that has happened right now, where there was a lot of product available from India and China, where the overall demand had really slowed down. So there were piles of inventories that were being created in China and India, which ultimately the overall consumption was very low and demand was low. So that is the so I think once a better demand or a normalized demand will come, and all these pipeline inventories will dry down, then I think we can go back to the routine margins.
So two small points. First is that on the ADD front, does these circumstances require the need of an anti-ADD imposition, or are we in any process of going through it, or the period is too short to go? And what have been the import from China to the country, sir? Any comparative number you can give?
Anti-dumping is a little difficult in this case because it is not a consistent import. If you look at last 6, 8, 10 years data, then there have been times when product has been actually imported from India to China. So anti-dumping, to try for an anti-dumping, is a little difficult in this case, because it doesn't really make sense when the product is also exported back to China at times. And yes.
Correct, sir. Correct. And import number can you have, sir? Do you have how much quantity have been imported the last 2 quarters vis-a-vis the comparative number, just to gauge the impact of the same?
Just about additional 10, 20, 30% product that comes in from China. Obviously, it comes because it's offered at a very cheap price. Because they are stuck, because the demand is low. So they just try to continue their financial cycles. They even sell it at loss. So such times can come. And I would say about HSA, Dunal cell phone monthly numbers would be around 1,000, 1,500 tons. Those are the kind of numbers that's probably imported from China to India.
Sir, if I come to 2 points about, one is about the caustic soda, and then for dye stuff industry, sir, we are also a consumer of soda ash. Just to manufacture that dye stuff, soda ash also act as a raw material?
No, so we do not produce soda ash. We consume soda ash. So we buy soda ash.
Yeah, that is what my question. Please, sir, bataiye.
Yeah, so we don't produce it, but we buy soda ash in large quantities. So we buy from local markets.
Okay. So what is our annual requirement of soda ash currently, and how much it has gone down over this last swing period?
So soda ash approximate consumption is around 12 to 15,000 tons a year for us. So monthly about 1,000 to 1,500 tons.
Okay. And that has also gone down.
The prices were impacted again last year because of the overall demand of almost everything. The soda ash prices have really shot up, and also at the same time coal prices and a lot of the input prices have gone up, the freight prices and everything. Why the prices of soda ash have really increased, but it has stopped going up, and it is kind of softened up around 36, 37, 38 levels.
Okay, so our consumption has also fallen in percentage to the.
Yes, our consumption has definitely fallen because our utilization is not a routine, which is around 70-80% in the intermediate space.
Okay, and what is the current utilization level for us, sir, for the dye stuff space domestically?
Yeah, for the last quarter, utilization was very low. And its dye intermediate utilization was almost 43%, For dyestuff, it was 35%, and for basic chemical, it was about 70%.
Okay. And any color you can give for the month of January, sir? How have been these three numbers? Any ballpark number for dyestuff, intermediate, and caustic?
See, dye intermediate and dyestuff, there is a slight improvement, and as far as basic chemical, there is a handsome improvement.
That is debottlenecking due to which you explained earlier.
Caustic.
For caustic, you explained that some changes you did.
Yes, caustic, there will be good improvement. Yes, because last quarter, 1 month was get wasted because of the implementation of the new technology. So such disturbance won't be there in current quarter.
Yes. So for dyestuff, you were telling something, sir. I interrupted you. So please complete the dyestuff part.
Yeah, dyestuff and dye intermediate, there will be slight improvement we are expecting, but not in a major way.
Okay. Any number you can give us some ballpark number, whether in the 40s or lower than what we have exited December?
About 5% utilization can get improved from the last quarter's level. Not much.
And for the chlorine part, sir, I think we are geographically located in the state of Punjab, wherein which you explained that we had an advantage other than the western part of the country, where there is a huge influx because of extra chlorine production. So how have chlorine played a part in our ECU, sir?
Chlorine, especially for us, is not something that creates any challenges. Usually in Gujarat, chlorine is a bottleneck when it comes to chlor-alkali business. But we have 4 pipeline buyers. We also have one more new plant coming up adjoining to our complex. So chlorine, in fact, we have more demand for chlorine than actually our production that is going to be. So chlorine, and there are many tonner buyers also. Tonner meaning we sell in cylinders also. So there is enough market and also a little bit growing market. So chlorine is not an issue for us.
We have been paid.
So what I mean to say is, it realizes, it has a better realization than in Gujarat. So to give you an example, a couple of months ago, the chlorine market here was under a lot of pressure because caustic was very high. So chlorine, market went down to -12,000, -13,000 rupees to the consumer per ton. At the same time, in north, in Punjab especially, the prices only went down to -6,000. So there was a big delta.
And currently, what is the situation, sir?
Currently, chlorine is around 0. So it has been corrected to around 0 levels in both western, Gujarat and also in north.
Gujarat also said that things have changed because I think the lower caustic production is there also. The utilization levels have gone down.
Yeah, so chlorine prices here in Gujarat are around 0.
Now that is because of the lower utilization levels for the caustic soda manufacturers because of lower demand.
So whenever the realization of caustic goes down, the chlorine prices try to improve. So that's how the trend is. Yes. This time it could be a little different because so now the effort will be to increase the chlorine prices maybe to 2,000, 4,000 rupees a ton or something. Usually they are successful when the caustic prices are affected. But I think this time it's not that easy because overall demand is a little question mark, I would say, in caustic, chlorine, everything.
Sir, you mentioned about one new buyer for your chlorine product in the vicinity. So could you just quantify which sector is coming up, and if you could elaborate more on the same for your chlorine demand offtake?
So they are installing a CPW plant, which is traditionally a chlorine pipeline buyer, for almost all the plants across India. And we have 4 CPW plant buyers next to us already. And this is the fifth one that is going to come up. They have already applied for the environmental clearance. And I think it will take about 12 months for them to set up the plant, getting the clearance and set up the plant. So, and they're talking about buying around 60 tons of chlorine per day by pipeline.
What product, sir? I missed your point. Very sorry. CW?
It's called chlorinated paraffin wax. It is CPW.
Okay.
And it mainly goes into making cables.
Power cables?
It goes into making cables.
Cables, means in the cable industry, power cables and other
yes.
wires and cables.
Yes.
Okay. And lastly, sir, how is the global setup for caustic soda, sir? I think so. There was some mothballing of capacity for Europe earlier, and also when we looked at the earlier report from some major chloro manufacturers, they were guiding for a deficit for caustic soda going ahead, taking into account the demand. So how should one factor in, and I think so, sir, 1 million ton capacity added for the country also has created some bit of flux here. So how is the export opportunity there for us, for the caustic manufacturers in the country, and global setup, sir, if you could give, where are the capacities down and how can the country take advantage of the same?
So the important point here is, China, which has about 45 to 50% of the global share, used to have 45 to 50% about 10 years ago. They have hardly grown because of the thermal power plant setup requirements, because of the environmental issues, permissions, etc. They have not really grown, in the chlor-alkali industry in China. So that's one point. Second, in the same period, India went from about 4 to 5% to about 9% of the global capacities. So the largest shareholder, I would say, has not grown. And India, which was fourth, after US, Europe, China, India was fourth. And India had an opportunity to, take a good growth, which already has happened. Like you said, 1 million ton has been installed. So that's one thing. Europe is definitely declining. Even before this war scenario, Europe definitely, has been on a decline mode, and there is not too much of a growth coming from Europe. US is there, some older plants have also been stopped in US, but at the same time, they are also modernizing some of the newer plants. I would say they are going flat or maybe growing a little. So overall, India has really, got this opportunity in last 5 to 8 years, which has, taken some of this new demands that has come up. All the growth that has come up, that has given the opportunity, to Indian players, which includes the local consumption that has come up. We've seen a lot of agrochemicals, textiles, paper, all this growth in the last 10 years in India. So India has been able to, take a lot of share. Earlier, there used to be a lot of imports to India, but now the scenario is now there are exports. So there has not been imports of caustic in a long time here. And in fact, last about 3 quarters, there has been consistent exports, at least from this Gujarat area. So the scenario is definitely, changed, where, imports have turned into exports. So I mean, that is why, it is going through such a strong cycle where there are export opportunities and local demand has been, consistently growing.
Right, sir. And if I look at your financial numbers, sir, if you could give me understanding of the forex impact for this quarter and also for the 9 months, how has forex impacted your numbers?
Forex has not impacted much as far as numbers, because we hedge everything, so we don't keep any forex exposure open. So there is a book entry we need to pass as per accounting standard. Otherwise, there is negligible impact to the result.
Book entry means, sir? Didn't get it.
See, as per accounting standard, we have to follow certain rules and pass accounting entry. So this is not an actual cash outflow, but we need to pass. It's in detail. So you can understand separately by connecting.
You are speaking to mark to market, referring to mark to market, the MTM part.
Yes, M2M part.
Yes. So what is the MTM part for the quarter and 9 months, sir? And whether it is positive or negative?
I don't have the exact number, but M2M part is bit negative, but may not be more than 1.5 crore.
Okay, for 9 months.
Yeah.
Okay. And sir, employee cost going down is affecting because of the utilization levels? That is a variable part, or any others? When a quarter on quarter, I think so on a console basis, the employee cost has also gone down.
Yeah. See, that is mainly because of the lower provision of commission to the promoter. That is the main reason. See, as per resolution, they are eligible for 7% of the profit of the company. But since the profit has lower, so we have not done any provision for the promoter. And that is the main reason there is a decline in employee cost.
Mr. Saket Kapoor, may we request you to return to the queue? There are other
Yes, ma'am.
participants waiting.
Ji, madam. I will return to the queue.
Thank you very much. We'll take a next question from the line of Vaibhav Barjatia from Honesty and Integrity Investments. Please go ahead.
Hi, sir. Thanks for providing the opportunity. So you had earlier highlighted beautifully that how over a period of over a decade or so, things have changed in the industry. So I just wanted to understand, it is quite apparent, the demand issue is quite apparent in the intermediate segment. But on the supply side, are you seeing things changing fundamentally in terms of Chinese supply? Are the Chinese guys coming up again internationally with full supply or increasing capacities which can impact prices even when the demand returns to normal?
Just a couple of quarters back, we were doing quite okay. The intermediate demand and pricing was very strong. So I don't think that Chinese supplies has come back or anything, and I don't think that Chinese capacities of intermediates are going to come up aggressively. So I think that is not going to happen. And locally, yes, there are some smaller capacities that have come up in the last 2, 3, 4 years because the intermediate space went through a very good phase about 7 and 10 years ago. So some players try to do backward integration. Some players, try to come into this business because it was doing really good. So some capacities have come up, but nothing major. If I put them all together, a few plants that have come up in the last 3, 4 years, that's combined maybe equivalent to one of the large players. So it's not that worrying or anything. But some few small capacities are there already.
Okay. And can you help us understand for both vinyl sulfone and HSD, who are the top 1 or top 2 players in China with really big capacity?
Which one is one of the largest? That's one player. They are the largest player in terms of reactive dyes where HSD and vinyl sulfone are used mainly. And another player is Longsang. That's another very large player, which has a lot of share of IP dust. So these two are the players I would say are the largest.
Got it. Okay, sir. And sir, lastly, on chloralkali side, we see lot of players who are producing hydrogen just by the nature of process. They have forward integrated into hydrogen peroxide as well. So I just wanted your thoughts on that piece of forward integration, that why we have not done it yet, and do you have any plans for that?
So hydrogen peroxide is there part of our growth plans, but definitely not at the moment. Yeah, like you said, yes, it is a good integration, forward integration from the hydrogen, where there's a good value addition of hydrogen that happens. So that is, yes, we can, there is also a sizable market in North India which we can cater to. But it's definitely not on the cards right now because we are committed to our SICA project right now, where the benzene derivatives, will be completed in few months, and then we will try to get back to our sulfuric acid plants, which are already started, but then we have to stop because of this overall pressure situations. So yeah, that kind of, there are many integrated products, from chlorine and hydrogen that can be planned, and that is part of our plan. But that will all come after our SICA plans are executed and settled.
Got it. Understand, sir. That's it from my side. Thank you.
Thank you. Our next question is a follow-up from the line of Aditya Khetan from Smith. Please go ahead. Aditya, please go ahead with your question. Could you please unmute your phone and go ahead with your question?
Yeah, thank you for the opportunity. So my question was onto the other expenses part. So this quarter we had witnessed that other expenses have gone up quite sharply. Like as a percentage of sales, it has been around 29 to around 30%. So our average range used to be around 25-26%. So is there any specific reason? Because our gross margins have actually so they have expanded on sequential and on YOY basis. But because of higher other expenses, the EBITDA margin seems to have been compressed. So can you explain this other expenses?
So other expenses are majority are a fixed overhead kind of thing. And if you look at September quarter, then it was 9 crore 76 lakh. And during the December quarter, it was 9 crore 95 lakhs. So there is not a major change. Hardly 2-3% improvement is there. So, but the turnover is lower. So when you compare it with the turnover, then you will find major change is there. But as far as absolute number, there is no much change.
Okay. So because of shutdown, so have we taken some sort of one-off because there was a shutdown in caustic soda? So is there any sort of which we had booked in this quarter in other expenses?
Yeah. So shutdown related extra expense, we have not booked anything. But as you have very well understood, whenever there is a shutdown, fixed overhead will definitely be there. So that will become a part of expense, and we are not capitalizing that. So correct. That's why the percentage effect is higher.
Sir, can you help me with that number of additional expense which we had incurred for the quarter?
So there is no specific. See, as I mentioned, sulfuric acid plant was shut for about a month. So it's a routine feature. Every year we shut down it for a month. And caustic was not functional for about 3 to 4 weeks because of the technology upgradation. So that effect is there. In caustic, sir, mainly salary, etc. overhead is 1.5 crore, and for sulfuric it's about 50 lakh. So roughly 2 crore of expense, kind of overhead which is there, but there was no production linked to that. So we can say that much extra expense was there.
Okay. So just one last question from my side. Sir, when we look at the company's history for the last 12 quarters, sir, even during the good times, the company hasn't crossed EBITDA margins post 12%. And currently in big demand scenarios, we are witnessing that numbers are still poor. So, sir, how you see these things to change? Like, so considering now the benzene derivative plant is coming up and caustic soda ramp up will happen. So can you expect, like, at good demand, can we like cross somewhere around 15-20% EBITDA margins in one quarter? Is there anything like which we can build in some quarter, or how we should look at it? Because the numbers have been very poor, like for the last 12 quarters. Despite having good demands also, we have not been able to make good EBITDA margins. If you can explain me in a brief, sir, what would be the strategy?
So like you mentioned, last 12 quarters, we have also been focusing on, when and why our numbers are impacted. So there are two factors. One, earlier we were dependent too much on the textile sector, which is again very volatile. Selling to textile, is also a low margin business sometimes in some products. So what we try to do with the acquisition of chlor-alkali, which is traditionally a high EBITDA business, and second, going into some specialty derivatives, which is benzene and also sulfuric acid complex, which is again a high EBITDA business. So the idea was to have more diversified business portfolio, more products which are selling to more applications rather than just textile or some other applications we depended on too much earlier. So if you see our share of revenue that comes from different businesses for us has been changing since the chlor-alkali, and also again when we start our Saika plants, I think it will again bring in a significant revenue from there also, which is again will be a new sector for us, with sales being done to agrochemicals, pharmaceuticals, and specialty chemicals. So that is the idea. If our textile business is doing normal, if not too much demand, but even a routine, and if chlor-alkali, like we are anticipating, does a high EBITDA business, and also our new business that is coming up does again a strong EBITDA business, we can reach about 15 to 70%. That has been our goal, since the last 2, 3, 4 years. We have been trying to create a 2,500 crore plus revenue model where we want to try to reach EBITDA of around 15-16%.
Okay. Thank you, sir.
Thank you. Our next question is a follow-up from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. A very brief understanding, sir. Firstly to the point, sir, about the promoter 7% part that you were just explaining me. So last year, what was the total remuneration paid to the promoter entity, sir? Absolute numbers, can you share?
Yeah, last year it was about 11 crore. And
11,
this year we have not provided anything till date.
Okay. So 11 crore constitutes around 7% of the PBD number?
So there is a formula as per Companies Act, and
right,
as per formula we are required to calculate and we can pay. So as per resolution, 3% is to our chairman, Mr. Suresh Patel, and 2% each to Mr. Bhavin Patel and Ankit Patel.
Okay. 3% to the chairman, 2% of the profit to the MD and the joint MD then?
Yeah, executive directors.
Executive directors.
Yeah, 2% each.
Okay. And what is our dividend distribution policy, sir?
So we are maintaining almost 40% that dividend, but we don't have a clear policy. But normally we maintain about 10% of the profit, near to 10%.
But sir, to categorically, sir, when we can put forward a 3% payout of total profits to the promoter and 2% each to the promoter entity, this 10% payout to the minority shareholders, there should be an equitable aspect in that also. But anyway, that is the board prerogative, and you people have to decide. But sir, coming to the capex part and the coal issue, coal prices I think so have declined considerably. So what have been our net coal requirements as a fuel? What are we using, coal or gas, sir?
We are using coal, I would say about 90% of our fuel is coal, in all the plants. And yes, you are right that coal prices have really skyrocketed, and for the main common quality, the prices went to around 11,000 rupees per ton plus, which is now corrected to around 9,000, and again in next 10 to 15 days it is expected to be corrected maybe up to 8,000 rupees also. So that this was definitely a problem in last couple of quarters where our energy costs had really gone high, and now we are hoping, we are expecting, to coal being one of the main inputs, we are hoping that we'll have to spend less on the coal, which will help some of the products which are under a lot of pressure in terms of margin. And in the quantities, I would say at peak at the company level, we use about 10,000 tons per month.
10,000 tons per month. And so can you give a number to it, sir? Out of the fuel mix cost, what would be the coal prices absolute number we spent on a monthly basis? So that would give us an understanding that
if I use peak, if all plants are running, and now today's price is around 9,000. So if all the plants are running today at about 90% capacity utilization, then the company would be spending around 9 crore rupees per annum, per month.
Per month. Right. And lastly, on the capex part, sir, you mentioned about sulfuric acid plant where we have to relook and we for better market to go ahead. How much have we spent, sir, as of 9 months, sir, and what are we planned for this year? And also, what is the maintenance capex we do, sir, on an annual basis? You mentioned about the caustic part of segregating that.
Yeah, for sulfuric acid plant, we have spent almost 64 crores. And as far as maintenance capex, it's ranging from 15 to 25 crore for the company annually.
Okay. And what is the further capex we'll do in this remaining 3 months? So pura baras ka kitna hoga?
For maintenance capex, I am saying the annual number.
Okay. Yes, sir. And for the growth capex, capital expenditure, how much we are doing how much we have done for 9 months? What is anticipated for the coming this quarter? Total year, what is the projection?
Yeah. See, for the 9 months, once again. Almost 250 crore we have spent, and another about 120 crore we will spend.
Okay. And can you give us the net debt number then? What net debt?
Presently, working capital is almost 340 crore. And term debt is 410 crore.
410 crore. So this 370 crore which we are spending is all. How much have been from the cash, and what have been our further borrowing that has gone up? Just to have an understanding how the cash flow has been and how have we utilized the fund cash generation for the 9 months.
We have used internal accrual. Till date in the project is about 80 crore, excluding the land part which we acquired earlier. And going ahead, we will use almost 30 to 40 crore in current year, and another about 40 crore in next year from the internal accrual.
Yeah. And so this peak, the peak debt will be, sir, post the sulfuric acid plant coming up. What would be our peak debt?
Peak debt would be around 900 crore. About 600 crore is term debt, and around 300 plus crore will be working capital. So it can be 900 to 1,000 crore.
Okay. From current 750 levels to it will go up to 900 to 1,000 crore.
Yeah, that will reach in by the end of next financial year.
Okay. And this working capital is lying low, sir, because of lower utilization level. This will also go up once your capacity starts moving up as the demand moves?
No, that will not move much because the internal
cash flow will improve.
approval will
improve. Yeah.
Yes, cash flow will improve. So that will get compensated against that. And even repayment will also start from the next year. So we may not reach to, we may restrict ourselves at about 900 crores, not more than.
Okay. What is the repayment number for next year, and sir, what is the blended cost of funds, sir?
Next year, it's about 55 crore.
Okay.
And
cost of funds. Cost of funds, sir. You can give me blended cost, and also if you can give me the breakup between working capital fund and the long term which you have sourced for the project.
Blended cost at present is about 6%.
6% even after this interest hike, sir?
Yeah, because we are using about 150 crore of packing credit in foreign currency, where the costing is about 4.5 to 5%.
Okay, and for the project one, sir, what is the long term? We have what rates have we tied up?
That is changing every day, but
yes,
average is about 8 to 8.5%.
And lead banker also, sir, last.
Sorry?
Lead banker from whom the loan has been sold?
Yeah, so for term loan, it's HDFC, Union Bank, Exim, and Indian Bank. And apart from this, Axis Bank, ICICI, Kotak, they are working capital.
Yeah. Thank you for all elaborate answers, and thank you for the time patiently, sir, answering these. And all the best, sir. We hope for better times. And thank you, SGA, for organizing. And thanks to the management, sir. Thank you.
Thank you. Thank you.
Thank you, ladies and gentlemen. That was the last question. I would now request Mr. Ankit Patel for closing comments. Please go ahead, sir.
Thank you. With this, we conclude the call and would like to thank everyone for joining us today on this earnings call. If you have any further queries, you can connect us or SGA team, our IR advisor. Thank you.
Thank you, members of the management. On behalf of Bodal Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your